Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, the usual gang with you this morning. Going to be an earnings kind of day between, Whirlpool, Verizon, AK Steel, Triple M, Lockheed Martin, Pfizer. We'll get to as many of those as we can. Plus, we have Apple after the bell, so we'll talk about that. We'll talk about just a bad day for the market yesterday right after our show ended. We got the Nvidia headlines and just not a good day there. So we'll talk about the follow through in that. And we just had the GameStop news come out. They were halted about 10 minutes ago or so. And the news is out now. GameStop concludes process to pursue the sale of company. They have terminated their efforts to pursue a sale of GME. So that is happening right now. Before we get to that, Joel, quick levels in the overnight session.
Trading at the highs of the pre-market session. That would be 26.45.75. We're right there at 45 and a quarter. Folks, not much up here. I'll just give you yesterday's high, Monday's Globex high, 63.50. That is your one and only target on the upside. A lot of room there. Coming back on the downside, your close at 42 even. An area of interest and mid-range on the session, 37 and a quarter. Crude up 50 cents here at 52.49. Still in a 52 to 54 trading range. Gold maybe has put 1,300 behind it, trading up 540 at 1314.70. Silver up 11.5 cents at 15.88. Triple D earnings season here, getting some good reports and some not so good reports.
It's mixed. Let's start with GME here. This is the news that just broke here 2 minutes ago. Terminating their effort to pursue the sale of the company. So we know this got the big pop from 13 to 15 because they said that they were doing a strategic review to potentially try to sell the company. That is not coming to fruition, and they are stopping that pursuit. So I would imagine you're going to see this thing probably maybe back to the 13 handle here this morning. The stock is halted here right now, 15.50. If I was a gambling man, I think you're going to probably be lower 14s, mid 13s, but it's going to get hit on this news.
How much do you think they paid to have that strategic review done? Because I could have saved them a hell of a lot of money.
And tell them there's no buyers?
Yeah.
They said the reason, I just kind of quickly glanced at it, and they just said that the reason was that a potential acquirer would have difficult time getting the financing. They're trying to find. Meanwhile, potential acquirer
because
probably
the only people that want to buy GameStop.
It's probably there isn't a potential acquirer.
The only people that want to buy GameStop live in their parents' basements, and so they don't have the money.
I don't know if they want to buy it either because they got everything's online now. So, anyways, I think we're going to be hit pretty hard here this morning. I'd imagine it's going to be down over $1, maybe $2. So back to, it came from 13 when the news came out, the news broke, it came from 13 and a quarter. So that's kind of where you think it might. That's where I would initially think it might go back to. So we will find out.
Yep. 1326. There's a gap area between 1326 and 1370. If you're so inclined, 1297 was the close before the news came up. So, some shorts might be happy to bring it in there. Better, like I said, a better area to cover short than initiating a long. I mean, I just don't know where this company is going, and long term or the short term.
Let's jump over to the earnings parade because there is a lot of companies reporting here this morning, a lot of companies reporting last night. Start with some of the big guns. Let's go to Verizon. Verizon is getting hit here on its earnings report. It is starting to come significantly off those highs there now, back to 53.5. Spencer, Israel, what were the results?
Q4 adjusted EPS, $1.12 versus $1.09 estimate. Sales, $34.2 versus $34.39 billion. So a slight sales miss, but a slight EPS beat to go with it. Mixed report overall. Fiscal year sales growth guidance in the low single-digit percentage.
Stock getting hit, down 2.2%. Only good news I'll have for you is it does have the big dividend, so you get those dividend buyers below, and you do have the low of the move, 52.40. Not sure we're getting all the way down there today. I think you find buyers as you get anywhere in that realm. So as you fall, if you were to fall another dollar, I think you got buyers below there at that old low. And there's a lot of people who like this for the dividend.
It's trading right on the lows of the pre-market session. The pre-market low comes in at 343. We're trading at 355. Street definitely leaning the right way into this report. Peaked over $58. That was in January or earlier in the year. And someone hit this with the downgrade. Do you have that in front of you, Spencer? Because I remember when it came off that high, it was either on
like last week.
No, it was either on January 10th or I would believe January 16th.
Well, we downgraded it on our own show after it went ex-dividend. We always say 6-week ex-dividend. I don't know the ex-dividend date, but I imagine it's one of those candles in the upper ones. So, obviously earnings helping us in this case. But again, that strategy seems to work. Strong ahead of the ex-dividend date week after. If you were just playing that, you're making money on it. I'm pretty much guarantee that because the thing's near the lows now. Had the nice run up late December, early January ahead of the dividend, and week afterwards. It's like clockwork, that strategy.
Yeah, we got to employ it more. What do you think this means for AT&T, who's, I believe they're out to do a report on Wednesday, I believe.
So it's coming. I mean, it's trading down in sympathy. These things aren't moving like that in lockstep as it always did. But 6.7% dividend, it's got the bigger dividend. It did have the run up there. I don't think it's good news for AT&T that Verizon misses, and that's why the stock's trading down 0.78%. There's also news AT&T was laying off some more people last night from some of their slower businesses. That can go either way. Sometimes when they do the layoffs, they actually reward this stock for getting expenses down. But I see it always as well. If you're laying people off, business isn't going that well. So AT&T has its own news here this morning too. Regardless, trade down 0.82%.
Both those stocks did peak the day prior to going ex-dividend. That was January 8th. Verizon topped at 58.69 and AT&T topped at 31.38. I know it's a boring stock and a boring chart, but look at the consolidation here over the last 10 sessions, 11 sessions for AT&T. You've been mirrored in a less than $1 range between 30.23 and 31.04 for 11 straight sessions. Let's see if the Verizon report or their own report will shake it out of this trading range.
Let's go over to Pfizer. It's getting hit here this morning too. I do have Pfizer still in my invest portfolio. I sold half of it though. When they started hitting the stuff, I sold half of it. I think up in the 43 handle. So pretty happy that I did that. I guess I should have sold it all. It's down here at 38. And just quietly here, we've talked about the defensive stocks not being that defensive. And you know what? If you look at a lot of these charts, a lot of these healthcare and the big drugs are starting to roll over here now. Pfizer down $1.23 on its earnings report. Quick results, Spencer will break down the technicals.
Yeah, the headlines this morning not helping. Q4 adjusted EPS 64 cents. That was in line. Sales 13.98 versus $13.95 billion. So the Q4 earnings were fine, but the guidance was not great. The fiscal year EPS guidance they gave was light. $2.82 to $2.92 was the range they gave. $3.04 was the estimate. Sales was also a little bit light, $52 to $54 billion versus 54.3. So light on the EPS and sales guidance for the fiscal year.
This is an area that it moved up quickly in the summertime. We had the big move when they were buying a lot of different names there and buying big pharma. Pharma had a really good summer. Went from 37 to 41 in a matter of a couple of weeks back in July and August. And we always say it goes up through an area quickly, can come down through an area quickly. And here you are, we get back into the 41 handle just a few days ago. Now you're in the 38 handle here. I don't see why I can't go all the way down the triple bottom around $37. Not sure it's going there today, but it's a disappointing report. We've seen these things, continue sometimes to dip after they report disappointing results. So talking against my book a little bit here, but I had that Pfizer. I bought it back in the financial crisis of 14, and I sold half, and I had held it for so many years. So you knew I was kind of nervous about it when I'm coming in selling stocks I've held for 7 years. So, and obviously I still wanted to hold a piece, but anyways, ratings on the wall here.
Well, Dennis, you went to the $37 area. I'll zoom in a little bit closer, and I'm looking at a quad bottom. This was in July of last year, between 38.04 and 38.18. So maybe longer term, working our way down to 37. Shorter term, when I see four lows in one area, especially after a big drop like this, I'm looking at 38. 38 even is good support for today. Pre-market low is right there at 38.30. So I don't know. I think we'll have always could get down through 38, but when I see a quad bottom there, that's good support to me.
I'm just trying to do some trading at the same time.
Sure,
so let's jump back over. I just had a trade going. Lockheed Martin, it's down $6. So we're 3 for 3 here so far. All three stocks that we've talked about reported so far are getting hit here on their earnings. There is some stocks trading up, so it's not all bad news. But let's do the more bad news. Lockheed Martin down $6. Not a big deal when you're $280 stock, but it's trading down the results, so they must have disappointed a bit.
Oh, yeah, Q4 EPS, $4.39. That's in line. Sales was a slight beat, 14.4 versus $13.7 billion. But the fiscal year EPS was light, and the fiscal year sales guidance was light as well. So the fiscal year EPS was light by calling a range of 30 to 40 cents, and the sales guidance for the fiscal year was light by a smidge, 55.7 to versus $56 billion estimate.
All the charts, again, still a lot of them are starting to separate, but some of these still look the same. This looks like the S&P chart where it's had the big move up, and you're like, is it going to start to give some of that back? But the S&Ps have been very resilient here. Lockheed Martin giving a little bit of it back, but I'd say bulls still have some control. Where they lose control, I think, is 278. A little red candle there sticking out on January 22nd. Lose to 278, and then it starts to maybe get interesting for the bears, but I will argue that it's still in an uptrend. It is disappointing results. So I don't know if I'm sticking my head out right away, but if for whatever reason you start to find some buyers in that 278, 279 area, maybe you give it a shot.
Yeah, triple D, man. I'm just looking at the dailies here. I see that 278 low from January 22nd. And if that doesn't hold, boom, you're dropping to the $271 area, pair of lows under 271 from earlier in the month. Like you said, though, $280 stock. Not real liquid. We'll just keep an eye on the pre-market low for right now, and that comes into 279.90. But
all right, we were way too conservative. I'm going to interrupt you. We were way too conservative with our GME saying 13 handle came from 13. It's 11.75. They're absolutely punishing these things, and that's why when and we talked about this. I maybe I just thought it, but I'm pretty sure we talked about it on the show that day when GME got the 15% pop from 13 to 15, and we're like, is anybody really going to buy this thing for sale? I think we even said it was, kind of like implied that it was a gift because I didn't think anybody's going to buy it. And here, if you were holding out, hoping for a sale here on this old GameStop stock where everybody does everything online and they're still selling the physical video games in the store, you're being disappointed here big time this morning. 11.75 here now. Is this an overshoot? Maybe, but it's interesting. It did bounce at 11.56. It did bounce at those lows here. That's the low of the move. So that's where you've got your initial support, I would say. You do have some support down 11.50. But man, 12.94% dividend. You got to wonder, can they keep paying that? And the business is under attack. I mean, people don't need to go into the physical store to buy the games. So I don't get it. And 1550 was a nice rally there, so I hope some people run the register up there if they were along it. If they didn't, well, here's a little lesson in chasing rumors.
Are you like reading my mind today, or what's going on here? Because like I pull up a chart, and something happens, I look at the news, and then I go to my daily right away, and boom. 1, 2, 3, 4 lows in a row between 11.56 and 11.77.
Bounce right there. So it's a nice bounce. That held. So if you just bought at 11.50 where it just traded there, that's a nice spot. So not saying throw it in the garbage and it's gone. 11.50 is where you've got some support there. It did bounce out there twice just now. So they're defending that level. So keep that in mind. If I was short this thing, I'd be ringing the register right now.
It's like one of those orders, like when when a stock is opening, and we were at Bright, and you were thinking, man, I'd love to cover this thing. Let's just say at 98, And then all of a sudden, you get a buy at like 96 or something. You're like, what? And there was some major price improvement there as if you were trying to buy the $13 level. But right back to the lows of the moves here in GameStop.
Where did it reopen from the halt?
Oh,
go to the pre-market chart. Go to the pre-market chart, Spencer. You're showing the intraday chart. We don't care about that. We want to see the pre-market chart.
Let me go to the 1 minute because I'm going to have to drill down here. Who knows?
Are you controlling the charts,
Here,
Joel?
hold on. No, I got the pre-market chart. It opened at 15. No,
that would have been. It's hard to tell because that would have been like
weird,
it was trading before the hold. So it's traded today ahead of that. So I think somebody said 13. I'm just sure. 13. I'm just saying 13. So if you were throwing it out there 13 short right off the hop, you got a little bit of reward there too.
813, I believe is when it came out of the halt. I do see a 1540 print and 1139 print, but those are probably just some latent orders getting popped by. But that's what I see. I see 1139 low right on that initial swoon back up at 1222.
Wow. So anyways, GameStop 1223. We did bounce 1150 for trading intraday. Keep an eye on those lows there. What happens in the pre-market sometimes gets retested in the regular session. So I think you could have some support there again in the regular session 1150. I like that level as a short-term trade. I hate this stock as an investment.
All right,
jump over. Where do you want to go? Spencer Israel, lead the way.
Back to the earnings parade, and I guess we'll stick with the theme of misses here. We'll go to Harley Davidson.
They knew this one last night. I'll tell you a story before you give the numbers, Spencer. We'll come right back to you. But this was trading down $1 last night, and it traded quickly down $1. And I was like, I'll give it a shot. I'll buy it down $1. It's giving me a lead. And more sellers came in, and more sellers came in. I was like, there's too many sellers in this. I'm like, this almost acts like I don't know if somebody knows something, but I don't know if somebody doesn't know something. So anyways, I turned around and took a 20-cent loss on it last night. Pat myself on the back. That's a good loss to take because I bought it, I think, $35.50. I think I sold it $35.25, so 25-cent loss. And really glad I did that this morning. It's $32.70. So sometimes when they're giving you a lead after hours ahead of the report, there's a reason for that. And there was just multiple sellers. There was a lot of pressure. Maybe people just had an inkling. Maybe people, count numbers of maybe they go to the lots and count like Brian Sazzi used to do. But maybe somebody else knew something too. So anyways, down 10%. Give us the details.
Yeah, the Q4 adjusted EPS 17 cents versus a 29-cent estimate. Sales 955.6 million versus 1.05 billion. So significant misses on the EPS and sales in the Q4 for HOG.
32, you're trading near the lows of the pre-market session. Your pre-market low comes in at 32.70. I see a 32.61 low on December 27th. After that, it drops $1 to 31.80. So those are your two levels on the downside coming in play in Harley Davidson. And where the stock has just been in a major downtrend here since it peaked over $60. I don't see any reason to be trying to pick it up here. No. But Dennis, any comments?
No, I don't see any reason to get in this either. Well, this is another stock, and this is declining fundamentals too. And Spinner in the chat just said something great, and he said with GameStop, never buy a takeover name with lousy fundamentals. Write that down because that is a great thing to think about there because people chase all rumors. Chase rumors on stocks with good fundamentals. Where if it doesn't materialize, you don't get slaughtered like you did today in GameStop. So, down 21% here. So, Hog's the same thing. I mean, doesn't have any rumors here, but why am I want to buy a company with lousy fundamentals? This stock has been in the doghouse for basically 5 years, 6 years. Got up to $70 back in 2014. It's been a downtrend ever since. There's people who love Harley Davidson. There's, my neighbors go. There is people who really, love riding them. I'm not into it, but that's not to say, but the rating, when the sales are declining, when they've got issues there, we've known Harley Davidson's had issues for years. So I think there's just better places for your money. Maybe eventually it turns around and people start, really talking and riding bikes and doing everything again here. But as of right now, it's on the decline. It's been on the decline for 5 years. So I like buying stocks in uptrends, not buying stocks in downtrends, especially in the longer term.
Yeah, Good comments on that. 32.90 is your last print, down 371. Dennis, were you when you were getting peppered on the long side, did you have any inclination to maybe to go with the trend and short it?
No, because I had to, because it was already, I'm selling in the hole. So it's like I feel like I'm giving up an edge. I felt like when I'm buying at 35.50 last night, initially, like when I was like one of the first buyers, I'm like, I feel like I got a little bit of an edge because it's already trading down 3%. We don't even know the report yet. So I was like, wow, and I often do that. If a stock's like trading down 3-4% ahead of the report, sometimes if I feel like it, I might, take a chance because maybe in a really disappointing report, it only goes down 4 or 5%, but they beat, it could go the other way. And but this was one, I know Harley Davidson can really get killed if it's bad. And when new sellers come in and another new seller comes in and another new seller comes in, I'm like, no, it's too many sellers. They might know something. I don't know anything. So I turn around and take You've got to, this game. And
that's good.
The difference between you, and this is, something for every new listener and even seasoned traders now, the difference between, you being successful and not successful isn't how well you're going to do on your winners. It's going to be how much you only lose on your losers. It's all about discipline. When you are wrong, quickly identify you are wrong and admit you are wrong. How do you know you're wrong? You start losing money in the trade. So I have very low tolerance for losers. I will take some pain, and in different situations when you're trading earnings, sometimes the liquidity is not there and you've got to take something through the report and there's nothing you can do about it. But if you have an out and you think, okay, all of a sudden, when I initially entered this, I was like, oh, maybe just one guy is nervous about the report and selling. Well, when multiples come in, I was like, no, there's too many people nervous here now. I don't like this anymore. I can eat a 25-cent loss. I'll take a 25-cent loss on a stock that can potentially go down 10% the next day, which it did. So that's a good loss to take. So that feels like almost a winning trade. It's not, and you say, oh, you lost money on, how is that a winning trade? Well, I didn't lose 10%. I lost 0.7% and I was wrong. So I'm happy about that. So it was nothing to do with the fundamentals. It was nothing to do. I do that on all earning stocks. I trade after hours. And if a stock gives me a 3, 4, 5 point lead, a lot of times I will take that lead, the percentage points. That was like a 3% percentage point lead. Gives it to me, but then I get more information because there's more sellers coming in. I might be caught in somebody who might know something. So I don't get the hell out. So anyways, and I was able to get out and happy I did.
Yeah, I mean, it's one of your better trades of the day, right? I mean, if you...
Yeah, you lost 25 cents in a stock that you could have lost $3, well, actually I was buying 35.5, but $2.50. So it's a good loss. There is such thing as a good loss. And this other quote too, and I hear Kramer say it, and I like Kramer, I watch him all the time. I respect, he's got a lot of great information on his show. He, nobody knows stocks like Kramer, so I'll give him that. But one thing he says that I disagree with is he says you can't go wrong taking a profit. He says that all the time. That is, I completely disagree with that. Because if you are always taking your little profits and holding on to your long losers, you will 100% guaranteed lose in the day trading game. You've got to cut those losers and let the winners ride a little bit. That's how I think you actually get some success in this game. We always say employ at least a 2-to-1 risk reward, potentially 3-to-1 risk reward. Jeremy Newsom, who we talked about when we were on his show a little bit there yesterday in his chat room, and we're going to be in there today. He does this great. He outlines it all. When he enters a trade, it's so set up. He's got the trade. This is where I'm buying it. This is where my stop is. This is where my target is. It's all set up. So it's in stone, and he'll adjust on the fly a little bit. If it starts moving in his favor, he'll move up the stop, so he's not going to ever lose on the trade, not letting a winner become a loser. But on the downside, he's not adjusting those stops. If the stock starts going against him, maybe he'll cut out early, but he isn't going to let this thing get 3, 4, 5% against him. So, and that's the whole thing, is people do it so much, and we saw it in the Bright office. These are even traders that came from the floor and they're seasoned, and they do it too. They're like, oh, it's way against me. It's going to come back. And they sit there in the hope trade. We watched, our buddy Al, take Nortel Networks from, $50 down to zero because he kept thinking it was going to come back. And it didn't. And you've got to be aware that stocks can go to zero. Your company, they obviously don't all do that. And most of them don't. Even in PCG's case, sometimes they don't when they go bankrupt to this point, which we'll get to in a second. They actually go up. But in any regard here, it's important to be disciplined in this game.
And we got some PCG news, huh? Or is it just being a wild child that it is? Trading on 67 cents here at 12.68. Always news on this stock. But for me, 1450 was the high on the day where they were exonerated for the 2017 fires. You popped up to 1415 yesterday. So keep an eye. I don't think it's out of the woods until it could clear the 1450. Keep an eye on the news on PCG.
Spencer, so give us the news here. Give us the news. It declared bankruptcy this morning.
Yeah, they filed for Chapter 11, but I don't know why it's rating 1267.
This is a new one for me, guys. I've watched, and obviously there's other stuff. I know you talked to bankruptcy lawyers on. There's obviously something here for shareholders, or it wouldn't be trading at $12. And we've said this, if you think, it's going bankrupt, it's going to zero. It doesn't necessarily have to do that. The market's been pricing this like it's not going to zero for a while. So even though they're going bankrupt, or at least they filed for bankruptcy, the stock apparently is not going to zero. And there must be something left, or they're going to reorg, or they're going to be something for shareholders here, because the stock would not be pricing at $12. And I've been in this business for 19 years. I've never seen a stock go bankrupt and trade at $12. So this is a new one for me. So I'm just going to reserve my commentary. I've been saying multiple times, though, the preferreds are not trading like this is, I was saying they're not trading like it's going to go bankrupt. They're not trading, I should be clarifying, they're not trading like it's going to zero, because here's your preferreds too. Let's go look at what they're doing this morning here. And so kind of an incredible story. They're still like, PCGA, it's 18 on the 25. I mean, it's trading at 60% of like what the par value is. So, bankruptcy or not, this stock is not going to zero today. It's going up. It's up 5.66%. So I'm not a lawyer. I don't know a bankruptcy lawyer. I don't know why. And breaking it all down, there must be some assets there that are going to be for shareholders. And it's not even like they're folding shop. It's not like so it's confusing as hell to me. And if somebody can enlighten me, if somebody can enlighten me, in the chat or a Twitter, let me know why this thing, is trading at 1260. But I'm not going to argue with it. The market's right. The market is, the market knows something about this, and there's obviously some value still here.
Yeah. Okay. Currently trading up 62 cents at 1263. Keeping an eye on the 1450 level. Just a big range. Be prepared for some heat or some volatility if you're trading this one. Already 3.5 million shares have traded.
Yeah, wild trading. So this was trading down initially, though, today. Was it not, Joel, in the initial filing? We were down the 11 handle.
Yeah, it's been all over the place.
What was the low today? Go today, not last night. Go to this morning's chart.
Okay, this morning's chart. I got to get rid of this 1 minute here because I was looking up that other thing.
$9, $9.50.
Oh, really? Let me see.
Bring it out.
Yeah, he's right.
At 4 a.m.
4 o'clock opening. I got a 9:01 print, Spencer.
People thinking that bankruptcy equals zero. It's not in this case. It's not. And they're getting crushed. So people are now, the person that sold this at $9-10 this morning, the early bird gets the worm, is not getting the worm. They're getting eaten by the worm. And I mean, it's just been, the rating's been on the wall. Go to the preferred market. The preferreds are trading at 60 cents on the dollar, 70 cents on the dollar. It's telling you stock doesn't want to go to zero. So I don't know. This is a one, but it's incredible.
53,000 shares traded in that opening bracket at 4 a.m., Dennis.
Yeah, people thinking, bankruptcy equals zero. It doesn't have to equal zero. Not in this case. Yikes.
All right, Spencer, give us some good reports here.
There aren't many. We can do Xerox.
The Spoos are rallying. The Spoos are up 3 1/4, and all you guys are giving me is bad news. What the hell is going on?
The stock went bankrupt, Joel.
Bankrupt stock trading.
Better news than that.
Gosh, man, guys, I can't figure you guys out. What's next? All right, give me some bad or some good earnings, and then the market.
There's not good earnings. It's
That's
3M.
That's what I
we
said.
We can go to 3M. This had a reversal here this morning. This was down this morning, and it's back up. Talk about 3M.
All right, I was going to do Xerox, but we'll do 3M. 3M reporting.
We're not in the 80s. I'm going to talk Xerox.
Okay, Q4. It's up this morning. What do you want from me? Q4 adjusted EPS for 3M of $2.31 is a 3-cent beat on the estimate. Sales $7.94 versus $7.87 billion. So beats on both top and bottom lines for 3M in the Q4. They did cut their fiscal year EPS guidance by 15 cents on the low end of the range from 10.60 to 10.45, reflecting headwinds from their M-Modal acquisition. But there's a chart for you.
The old when bad news is good news trick. We just saw that in PCG, and all of a sudden 3M's the same story. They cut guidance. Who cares? They bought the thing, and they started buying a hand over fist. This thing was what, 188 this morning, 187?
Lower than that, 180, 186.55.
Don't sell stocks on the whole. Bad things happen. You think you got the fundamental news information. This is a funny market, and it's a hard one. You got fundamental information. Funny things can happen very, very quickly here. So, just be careful when you're trading everything. So.
That's a good sign. I'll just go with the upside here because that's where we're trading at 200 even. We hit that in two different brackets in a row here. After the report came up, we've only backed off 50 cents from them. So I'll just give you a range here, and it's a big range. I'll say from 200 up to 202.62. For me, that would be sell range. And if I had a long and I saw it go down to 186 and I saw it up at 202, that would be my area. Actually, you have an exact double top at 202.40, 202.62. So if you're holding out for more, 202.50, that's a 5-star level there in Triple M today.
Allergan, bad news for Denny's portfolio. I still have this one in there, and it has been one of my worst stocks there, long-term portfolio. It's had a nice run up. It's given some of it back this morning. AGN obviously disappointed. Spencer.
Well, actually, though, the Q4 EPS, $4.29 versus a $4.15 estimate. Beat there. Sales $4.08 versus $4 billion even. So a beat there as well, plus a $2 billion buyback. So earnings is good. Buyback is good. Q1 EPS guidance, however, was light. $3.40 to $3.60 is the range they gave. $3.75 was the estimate sales guidance they gave for Q1. $15 to $15.3 billion. $15.39 was the estimate. So light on the Q1 EPS and sales, but Q4 beats and a buyback.
Down $6. The stock is hated. It's been hated for a long time. The multiple's ridiculously cheap, but it doesn't matter. It's been in a downtrend. I mean, the overall trend is still not your friend. Consolidation station around 162. That's been resolved to the downside here. So you now have probably sellers above talking against my investment book. Like I said, I still have this in the long-term portfolio, but this seller rallies. Well, I'm not going to buy them in the long term. If I had it on for a trade, I'd be a seller of rallies.
Boom. We are trying to sneak into the 150 handle. We haven't yet. Trading right near your July or January 17th low, 152.16, but not bouncing off this level. Maybe sneak under 150. I see 149.59 is January 15th low, and then 148 even. If you're even more bearish than that, you can do your move from 126 up to 161. What's that? A 35-point move, 17 and a half of that. That would take
zero math.
Right there. It comes in 140, 145, 146 is your 50% retracement. So that's another area if you're looking for this thing to get back a lot of its move. And certainly got a head start today.
All right, let's jump over. We got where did Allergan? Did Biogen come out?
It's 8:33, so we got like 2 minutes before we're going to grab today's guys. Biogen is out. So
quick. It didn't move much yet.
We can do that. In Q4, just EPS beat the estimates, $6.99 billion. This is the sales for $6.71 billion. So sales beat there for Biogen, and that's what I got.
Just hanging out. It's rallied a little bit off the lows. So when it got down there, I own this one in my long-term portfolio, sticking with it, but it's had a nice run.
There's a pair of lows in the 327 handle. We got far through that though. I'll just give you your pre-market lows in the area. Pre-market low is 321.30, but we've had a nice bounce off it. So your low of the day looks like it's in here in Biogen.
Quick look at imbalances. Morgan Stanley selling balance seems like every morning. 138,000 to sell here again this morning. Bank of America 114,000 to sell. So a little bit of sellers in the financials. Pfizer 82,000 to sell. We know that because the disappointing report. Square we have not talked about yet. Square got downgraded to underperform at Raymond James. That is equivalent to sell. That is knocking Square down 3.88% here this morning. There's 73,000 to sell. So it's going to be an ugly day for Square. Quick technicals before we go grab Sean.
Oh boy, on its heels after a big run up here. You know what? You got someone interested in the downside here at 72, 75, 72, 80. That's only 50 cents away. I don't know. That's in the middle of a big bar there. So below the that pre-market low, look out. Your next daily low comes in at 69.30.
All right, and on that note, I'm going to bring in today's guest. I'm calling him right now. He is Sean Udall. He's the CIO of Quantum Trading Strategies. Joins us pretty consistently every few weeks. So we're going to give Nick Shaheen a break today and grab Sean Udall out in downright balmy Arizona. Sean, good morning.
Good morning, Benzinga.
He gives us the best good mornings, doesn't he? He's really good at that. He makes me like smile. I could be in a down move, and I kind of am because I got a couple of trades going against me here this morning. But here's Sean Udall cheering me up. Sean, what's going on?
Well, I'm just trying to capitalize on what's already a good earnings season. So, I'm in the hunt. I'm in the hunt for my next idea right now.
I've got to thank you for the Western Digital trade, because you came on our show and you said WDC, you liked it here and you were buying it. I turned around and bought it that day too, just because Sean Udall was buying it. I was like, he does his homework. I'm like, I'm going to piggyback off the Sean Udall homework there. And I actually did buy around 36 and change. It popped so much on the disappointing report, which I thought it was disappointing at first, and then it went up to 47.95. So I lightened up the position and sold 2/3 of it up at 45 and change. Are you still holding?
Yeah, thanks for the kind words. Yeah, I actually popped some the day before because I think my two buys were 34 and 35-ish.
Yeah, and that makes sense.
40.
You came on our show and said you bought it yesterday. 40.
Yeah. Well, yeah, with the day before earnings, I'm like, look, I got to take at least a third of this off because this is my zero risk trade, right? And even but if you remember, the whole point was I kind of thought it would be like Micron. I thought it would report bad, but the stock would go up. And the only difference is the stock went up a lot more than Micron. My target's $88. I mean, so, but that's not a 6-week target. That's more like a 1 to 18-month target, 1 year to 18 months. But yeah, target's $88. I think a move to like 55-ish, I don't think is a big stretch. So, but now I rinse repeat it, right? So now I take some off. Now I look for pullbacks. By the way, I bought more at 41. It pulled back pretty good. I think the day they reported, they went from 46 to 41. So whatever
the day they reported, it was
day.
Sean, it was wild that night that it reported, it went down to $37.
No, I'm talking the next day.
But crazy that they hit it. They hit it down 10% after hours. So some people, savvy investors, were buying.
You know what? I never even saw that. If I'd have seen it down 10%, I would have bought it.
It was down 10% on the initial numbers, and within an hour, they had bought it all the way back up, and it was green. So great call.
Yeah, no, the day after, I think it peaked at 46, 47, retraced all the way back to 41, 42. I bought like high 41s, and I still have that piece on. So, yeah, I mean, and I have some on from before. Like this, I got about half my exposure that I bought. And again, I want to buy it. I mean, you give me 2, 3, 4 point sell-offs or something. The market, we're kind of getting a little short-term hot. So I wouldn't be surprised if a lot of the late, we're kind of setting basically a setup trade's coming. What I mean by that is, wouldn't be surprised if the market finds a way to scrub a lot of these late Momo buyers, the recent Momo buyers, basically.
And let's just go real quickly, just looking back at IBM. You pounded the table on that one for a while, got the pop off earnings, and really not giving it back. So when a stock, you have a stock like that and it has just a major gap. I mean, anybody waiting to buy this between, 130 and change and 125, do you just kind of just put that out of your mind and just say, whatever, if it stays in that gap area, I'm stay with it? Or how do you approach a big gap in a stock like IBM?
Well, it depends where the gap is coming from on the price, the value, and the price chart. I mean, I don't know if I believe that all gaps get filled. I think a lot of them do, but yeah, I don't know. I mean, if you like IBM, it's still a lot cheaper at 134 than it was at 164. So, it wasn't an expensive stock at 164. I kind of think IBM is going to be a goer. Again, remember, I didn't love the name, but again, relative. I think we were talking about IBM when like stocks like Facebook were still 225 and Apple was 215, you know, and et cetera, and Nvidia was 300. So, you know, relative to those guys, you know, 140 bucks on IBM was pretty darn good. That low on it was pretty crazy. But no, here's the thing. If they keep buying other companies, the stock's going to go a lot higher. I think it's that simple.
Oh, really? You don't think they're done in acquisition land?
No, but that's what I mean. I mean,
okay.
No, so they will, you know, it's kind of a you know, a circular argument. I do think they will keep buying companies, but if you just believe that they'll keep buying companies, and the red hat buy probably is about as bad as they're going to do. Meaning most things they're going to buy, they'll probably not overpay as much as they did for red hat. So yeah, I mean, if you basically believe they're going to keep buying companies, I think the stock has a lot of upside. So yeah, unless red hat's the last deal they ever do, you know, that would be a bearish scenario if they don't do any more deals.
We're on the line with Sean Udall from Quantum Trading Strategies. Before we go into some upcoming earnings reports, you know, Dennis and I are just scratching, I guess the rest of Wall Street here is scratching its head on PCG here, $12 flat on the session. They're filing for bankruptcy. I mean, I know you like to dig into the numbers. Is this just too much of a convoluted mess to come up with any kind of fair valuation? But we were searching for an answer, and since you drilled down to the numbers, any insight on PCG?
Well, I drill down in tech and finance and medical tech a lot more. It's not my core competency. I don't know if anybody, you know, isn't it still a ruse? Isn't it still, I don't know. I mean, aren't they still looking for concessions from the state? I honestly, I don't know.
I wanted it from a like a number standpoint. So we got some numbers.
Yeah, I mean,
where do you stand on Apple here? I know you were a little bit cautious when it was up at the 215, 220 area. It's had a nice haircut, probably low expectations for the upcoming report. What's Sean Udall looking for out of the Apple report?
I have no horse in the race right now. Haven't liked the stock for a long time. If I was trading it, I would trade it short into the print. I believe they probably have better than odds that they're going to guide lower again. But I don't know if there's a ton of downside anymore. So I don't like to, like, you know, hey, I like to short at high prices, not low prices. So I'm not one to pile into a short at the end of a move. Put it this way, I think Apple's got like 2, 3, 4 quarters of kind of sluggish results. I think there will be a really good time to buy Apple when nobody talks about it anymore and everybody hates it and everybody thinks they should fire Tim Cook, which is probably 3 to 4 quarters from now. You know, I don't think they're going to have a 5G phone. I mean, so it kind of harkens back to when they didn't have large screen phones and you had a really strong 2-year run for Android. I kind of think we're going to have a really strong Android run again. So until Apple has an answer for 5G, I don't really think there's going to be a huge, what do you want to call a huge inflection in iPhone growth. And that doesn't mean iPhone sales, they're not selling at all. There's still a huge replacement cycle, but there's no growth in the channel. And Apple just, you know, I think they made a pricing mistake. And that's kind of consensus view now. I said the same thing quite a while ago, about a year ago. But, you know, this ever increasing the price of the phone. Hey, price hikes are good until you reach the point where you've tipped over. And once you reach the point until it's like Fed hikes, you know, Fed can hike rates and think it's smart until they tip over. And, you know, Apple hit the tipping point on pricing. And I think, I mean, they should probably slash, you know, every phone by $100, $200. And then maybe sales would be pretty good again.
Let's cover a couple of other stocks here before we do some more forward-looking analysis. Were you surprised by that warning by Nvidia yesterday? I know you've been a little bit cautious on the stock here. Is this just an off quarter here, or is it time to start looking at Nvidia on the long side?
No, I think it goes to $80 or lower. I said the same thing when it was a $300 stock. I think that, you know, they had a perfect storm to the good. Everything that could have gone right for them at the same time did. Now they're kind of experiencing what normal chip companies experience, where like not every product channel sells great all the time. And so, you know, you have a stock that was trading at, you know, double the valuation or 50% premium to Workday. I think I used this example before, and they're still not that cheap. I mean, you know, you got a chip company that still basically has a software valuation, still 7 times sales. You know, it was what, a lot higher than that, was 14, 15 times sales. So I don't know, you know, Texas Instruments, a very expensive chip company at 6 times sales. And I think before this is all said and done, we probably see these guys back to, I don't know, four times sales or something like that. But yeah, I don't know when I'll like them again. I don't even know if I'd like them at 80, but I went short them at 80.
Okay, let's move on to a stock we've talked about a lot with you, Qualcomm. Just very volatile stocks. Basically had its 4th month of a big old red candle, coming back right down to that $50 area, not bouncing again. What did you think of the short report, and what do you think of the stock still?
Well, the short report was really funny because the short report, basically the whole premise of the short report was that he turned what is the consensus view into something that seemed to be a short report. So in other words, I don't know of a single Wall Street analyst that expects a favorable ruling from the FTC. I don't expect a favorable ruling from the FTC. So it's basically no news. Again, even the most bullish Wall Street analysts don't expect anything favorable from the FTC, yet it was good enough for a 19-page short report. So I don't know. You know, there's lots of strange things that happen in the market. You know, we talked about market structure, no uptick rule, all sorts of things, how stocks move. You know, a lot of this stuff's just weird. Doesn't really make a lot of sense. You know, December 24th is weird. You know, the whole December sell-off was weird. So, yeah, you know, basically they probably lose to the FTC and then they appeal. And then the clock starts again. And then the fundamental argument returns to Qualcomm once they're in appeal. The one thing I will say, and again, I'm not a legal expert on this stuff, but the whole pricing structure and IP structure of Qualcomm is all predicated on prior court precedent, because they had to defeat Nokia. So, you know, you guys remember Nokia at one point was Apple before Apple was Apple. And I don't know when, Dennis might know when this court date was, late 90s is when they defeated Nokia. And that's pretty much when all the pricing models and IP and royalty payment streams and all that stuff kind of got decided. And I don't know, it would seem strange to me. Now, the FTC is the FTC. It's not U.S. District Court. It's not Court of Appeals. It's not Supreme Court. But yeah, it would seem odd to me that the U.S. would, 20 years later, overturn prior court precedent. So that's one thing. The other thing is, it also would seem strange to me that the FTC is going after a U.S. company when there's a global race for 5G technology and 5G supremacy, and neutering Qualcomm would in effect help China immensely in the race for global 5G supremacy. So it just all seems very odd to me. So we'll see how it all plays out.
All right, a couple stocks yet to report here. We'll cover those real quickly. A couple of the big guns here. Google, trading up $4 in the pre-market. Stock is rebounded off the low December lows, not quite as much as the overall market here. Give your thoughts, Google going into its next report.
It's the only FANG stock I like, although Facebook's sort of attractive again. But it's the only FANG stock I like, but I really don't like FANG in general. But I would be surprised if Google doesn't have a pretty good report. I think they'll probably be one of the stronger reports. I think relative to itself, they'll probably look fine. I don't know. I haven't really played Google. You know where I'd really like the stock is kind of 800 to 900. So during that market melt-off, I was watching it very closely, kind of hoping for, you know, maybe high 800s, low 900s. Just never quite got there. I would have been long in that price area, but it was, I think it was around 100 points away from where I really wanted to attack it. But I wouldn't be surprised if the report's pretty good.
Then one final one for you, Amazon here, AMZN. trading basically flat here in the pre-market. Big decline, like the stocks, has the rebound. Are there any significant levels or, some fundamental analysis you'd like to share with us on Amazon?
Well, I think they crushed the quarter. If they don't crush the quarter, you could have a pretty big problem with price. I think the holiday season was super strong for them. But see, then it's a matter of, okay, so what's next? Same thing. Haven't liked the stock. At 1,300, I was starting. My uber bearishness was getting eliminated really quickly. So basically, every 50 points below 1,400, I was going, So I don't know. I don't know where. I don't know where I would have taken the long plunge. I was kind of thinking. I think for sure 1,200. I probably would have done something on. But I would have traded if I'd have got a 250 point move. I would have sold it. So I wouldn't still have it at 1,700. But yeah, no, it was actually starting to pique my interest as a potential long. For about 2 days, and then it made a 200 point or 100 point move higher, and pop.
Tesla. Any thoughts on Tesla before we let you go?
That's such a weird, tough stock. I mean, it's really done nothing for 4 or 5 years. It's a range trader.
Yep.
I still think, I'm going to say the same thing we've said before. I still think it's weird you can be 2 weeks away from insolvency, and then you build a tent that saves the company. So I still think there's more shoes to drop. And we could be talking about a Tesla that doesn't really. Here's what I'm going to say. I'm going to say something different so it doesn't sound like we're doing the same show. Porsche is coming out. I would look at the Bloomberg article on what the Porsche new electric car is. And because remember, my original bearish thesis on Tesla like a year or two ago was not on financial stuff. It was on competition. And I think once the world starts seeing Porsches and Mercedes and Beamers and maybe even GM and Fords with really good electric products at the same or lower price points, I think Tesla's in trouble. And that was always my view, but I didn't see anything. The new Porsche electric car looks amazing. And I think once people say, well, okay, I can buy the Porsche electric car for the same price point as the expensive Tesla, it's no contest. People are going to go Porsche.
We've been on the line with Sean Udall. He's the CEO of Kind of Trading Strategies. Joins us to give us his fundamental and technical outlooks on the markets. Thanks, Sean. We'll be talking to you again.
Take care. Thanks for having me.
All right, S&Ps continue to climb here. We are up 4.5 handles at 2646.50. 2 ticks off the high of the pre-market session. Triple D, what are you seeing out there?
Lots of individual movement. So maybe the SPOOs are quiet overall, but I mean, there is lots of individual stock movement, and that's obviously due to earnings. You got a lot of different stocks going a lot of different directions here today. What I really wanted to talk about was the resilience of the chips yesterday with Nvidia. So Nvidia is trading down here, lots of downgrades today. It looks like it could retest the lows, but if you look at all the other chips, they held on pretty well. I mean, AMD was weak. It's the one that's most direct, probably, trading with Nvidia. But a lot of them, like Western Digital, opened weak, rallied straight up. And there was, Xilinx, XLNX, opened down $3, rallied straight up. So I was telling you again, Micron, same story, opened down. Micron opened down significantly. Micron opened down in the 36 handle yesterday after closing at almost $39. And it got all those losses back, but within an hour. Now, it did close off, and it was trading red at the end of the day, but it filled the gap from, the disappointing NVIDIA results. So resilience in the chips was very impressive yesterday. And you saw it, and the Caterpillar stayed weak, but you also saw like Deere tried to find buyers there off the bat. So the buy the dippers are still in here. And that's one thing to be aware of. If you're trying to short and you're trying to say, we're going a lot lower here and we're going to retest those lows, I don't know if we are either. We had a guest on our show yesterday said, I don't know if you're going to get that retest. And I'm kind of in the same boat now. I don't know if you're going to get that retest either. So, and I'm overweight in cash in my long-term portfolio, and it's got me a little bit nervous. So I'm not sure you're going to get this pullback here. Carter Worth was on Fast Money last night. He thinks you're going to retest those. So many people think you're going to retest those lows. I don't think the market's telling us that. We've tried to go down 3-4 times. It's some bad news, and we haven't been able to do it. So I don't think we're going to retest those lows. So I'm not saying you have to come in here and chase everything, but when you get stocks that are dipping, the buy the dippers lurk below. And we saw it yesterday with Micron. We saw it yesterday with Western Digital. We saw it yesterday in Xilinx, which has been an unbelievable stock. So any dip on that continues to get bought. You're seeing a dip here this morning in Square on a rating change from RJ, but if this got anywhere near $70, I think you got buyers all over the place too. So at 73, the risk reward starts to look not bad again, at least from a trading perspective. So you know what? I got my buy the dip hat on.
And you also have the factor when you come off a bottom like that, shorts didn't get to cover all their positions. So now when you have, a move off the lows and then you have declines, not only do you have people that, I missed the low, I need to try and get long, but you have competing with those shorts who, were sitting pretty in the middle of December, 2000 S&P, here we come. And all of a sudden, boom, 50% retracement. What do I do? And those were some quick moves off the lows. Bad news for a Benton Harbor, Michigan company. Whirlpool down 777 at 116.69. Spencer, what did they deliver to the street?
Well, I suppose it's better than being down 666. But Q4 adjusted EPS $4.75 beat the 4.25 cent estimate. Sales $5.66 versus $5.76 billion. So a slight sales miss to go with the EPS beat. The fiscal year ongoing EPS guidance $14 to $15 was the range they gave. $15.92 was the estimate. So very light on that ongoing EPS guidance for Whirlpool.
It's traded here and it hasn't. So you've had a lot of hours of trading with Whirlpool. It's not like it just reported 20 minutes ago and it's chopping around and trying to figure it out. They figured it out last night. This came out right after 4 o'clock. They've hit it. It's been trading the 116 handle for, the majority of the after hours session, the majority of the pre-market session. This is repriced. So I would not expect this to come back to like 123, 124 here today. It looks like it's priced where it wants to be. This is one of those defensive stocks that the market is not really in love with right now. The market's moved back into higher beta. This is not that. So this is not the stock that I want to own. This is not a stock I would be buying on the dip.
Just hanging out here. You were hanging out, making lows right under 116, and then you just had a little dip to 115 even. So if you're trying to bring in a short, keep an eye on that area. 113, 114 is your 50% retracement. Remember, this had a big, quick move up in 1, 2, 3, 4, 5, 6, 7 days. Basically went from 105, 120. So when you go quickly through an area on the upside, you can come down through that area quickly as well here. So Spencer, I know we got a few minutes left. We haven't touched on any analyst ratings. You want to go there real quickly, or do we want to get another report in?
We hit on one. We hit on the Square rating briefly before Sean. So that's probably the most notable rating change this morning, the downgrade from Raymond James to underperform in Square. I'm also seeing Stratasys moving on an upgrade from Piper Jaffray to overweight.
3D too.
Yep. Piper Jaffray upgrading 3D Systems and Stratasys both to overweight here this morning. So we're seeing some movement there. What else did I see? Outside of those are sort of the big ones on my radar. I didn't see too many others that really are causing any sort of volatility this morning.
Applied Materials upgrade RBC. Activision Blizzard was downgraded. Oppenheimer. GME still trading down 1222. Just wanted to say that as well. So the ratings land, there's nothing super exciting there, but there's some movement. So Square would be the biggest one for sure, Spencer.
Right. So that's essentially it. Let me make sure we got all the earnings that we wanted to. We did. We didn't cover AK Steel. I don't know if we want to cover AK Steel. There was such a
$2 stock. I mean, there's just and then we're gonna have to. We'll say it again. We say on this every earnings season. So many companies reporting. We're in the heart of it all. If you want to hear about a specific earnings stock, let us know. Send us the ticker. Write it in the chat, and we'll cover it. We'll try to cover it anyways.
We'll try.
But otherwise, we're just gonna cover the big ones because there's just not enough time in our hour show.
And I mean, looking ahead to after the bell today, eBay, AMD. And then the big kahuna, of course, Apple. And keep in mind that Apple is they almost always report at 4:30 Eastern time. So about a half hour after the close is when Apple, at least in my experience,
it's very consistent.
Yeah.
It's always reported right around that time.
So that's what you've got this morning, or that's what you've got after the bell today. As far as earnings, I mentioned eBay, Apple, AMD. Anyone else notable? Amgen, Juniper, so a couple other notable earnings after today's close. But that'll do it for
real quick.
Go.
Pfizer got down into that lower 38 handle. Someone's just pointing it out there. Got down to 38.10 and getting a little bounce. So look for buyers again in that area. And just real quickly, Dennis and I will be joining Jeremy Newsom here from the 9 to 10 hour for some continuing coverage. So hop over there and get some setups, some continuation of the show. Yep. Spencer, you want to wrap things up and preview tomorrow's show?
Yep, that's at reallifetrading.com. As far as tomorrow's show, a pair of guests joining us, Michael Hewson from across the pond, CMC Markets, and Mike Olson, Apple analyst at Piper Jaffray. So that'll be on tomorrow's show. If you missed any part of today's show, however, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just rewatch us on YouTube. Thanks to our guest, Sean Udall. Thanks to all of you in our chat rooms. Please remember all the information from our show is for informational purposes only and not meant to be investing advice. Stay warm out there, folks. We're in the middle of a blizzard here in Detroit. It's only supposed to get worse, so stay warm wherever you are, and hope you join us again on Wednesday.